what is tax collected at source, and in what kind of products this is applicable, and what are the sections that are required to file, and what is the last date, what is the due date for filing TCS. So, tax collected at source is a tax payable by a seller which he collects from the buyer at the time of sale, right? So, this TCS is applicable on final products, not on raw materials, work in progress. TCS is not applicable on that. So, tax collected at source is the tax payable by a seller, and Section 206C is the tax section governing this TCS. Now, these are the goods. Below mentioned are the goods which are covered for TCS provisions, and rates are also mentioned. So, when the below mentioned goods are utilized for the purpose of manufacturing, processing, or producing things, the taxes are not payable. So, when TCS is not payable, when we are reusing them for manufacturing the final product, or we are processing them further, or we are producing things out of them, then that TCS is not applicable. If the same goods are utilized for trading purpose, then tax is payable. So only for final consumption, when we are selling the products, right, TCS is applicable. For example, I am buying cheese and bread for my bakery store, then TCS will not be applicable because I will be making cakes or pizzas or further items out of it. But if I'm having a showroom of automobiles and I'm selling a car, then on car that TCS is applicable, I can charge and I will pay it to the government. Now, types of goods, these are the types of goods that they have roughly defined. Liquor of alcoholic nature made for consumption, timber wood, tendu leaves, timber wood by any other mode than forest leaves, a forest produce other than tendu leaves, scrap, minerals like lignite, coal, and iron ore, bullion that exceeds over rupees 2 lakh, jewelry that exceeds over rupees 5 lakhs, purchase of motor vehicle exceeding rupees 10 lakhs, parking lots, toll plaza, mining, and quarrying 2%, right? So we have limits on which tax is applicable. So if I'm selling a car which has price above rupees 10 lakh, then TCS is applicable, right? Classifications of sellers and buyers for TCS. Now, who can deduct TCS and who can on which product TCS is applicable? There are some specific people or organization who have been classified as sellers for tax collection at source. So no other seller can collect tax at source from the buyers apart from this given list. So what is the list? Central government can deduct TCS, state government can deduct TCS, local authority, statutory corporation or authority, company registered under the Companies Act, partnership firms, cooperative society, any person or HUF who is subjected to an audit of accounts under the Income Tax Act or for a particular financial year, right? So a buyer is a person. So these were the lists of all the organizations and companies who can deduct the TCS. So they included central government, state government, local authorities, partnership firm, cooperative societies, and any person who is subjected to audit of accounts. Now, who is the buyer for which TCS provision is applicable? A buyer is a person who obtains goods of specified nature in any sale or right to receive any such goods by way of auction, tender, or any other mode. So only by this means only if he's buying something for final consumption, TCS is applicable. The buying thing should be by way of auction, by way of tender, or by any other mode, right? However, the below buyers are exempted from collection of tax at source. So this government authorities, public sector companies, central government, state government, embassy of high commission, consulate and other trade representation of a foreign nation, these are exempted from getting TCS deducted. Means if these parties act as a buyer and they are buying something from the list that was given in the above page, then TCS is not deducted. Clubs such as sports clubs, social clubs, right? TCS is, they are also exempted from paying such TCS. Now, TCS payments and returns. All sums collected by an office of the government should be deposited on the same day of collection, right? The seller deposits the TCS amount in Challan 281 within 7 days from the last day of the month in which tax was collected. So, the seller who is collecting TCS, he has to fill Challan 281 and he has to submit within 7 days of collection from the last day of the month in which tax was collected, right? So if this is 31st March, last month was March, right? So by 7th of April, within 7 days from the last day of month, by 7th of April, TCS should be submitted in Challan 281. Now, if the tax collector responsible for collecting the tax and depositing the same to the government does not collect the tax, or after collecting does not pay it to the government as per above due dates, then he will be liable to pay interest of 1% per month or part of a month, right? So if he is not paying, if he is not depositing, suppose he has collected it and he has not deposited within the due date time, or if he has not collected at all, right? Both conditions are same. In that case, 1% penalty per month or part of the month, depending upon the case, should be done. Now, every tax collector has to submit quarterly TCS returns, that is in Form 27 EQ, in respect of the tax collected by him in a particular quarter. So, suppose he is paying for one quarter on time, and the end of the quarter, he has to submit a return in Form 27 EQ about how much TCS he collected in all the months and how much he has filed and why he has collected less or more, and accordingly he has to give the reasons. The interest on delay in payment of TCS to the government should be paid before filing the return. So if he has any penalty on interest, the seller, if he has any penalty on him to be paid, then he has to pay it before filing the return. Now, certificate of TCS. When a tax collector files his quarterly TCS return, that is Form 27 EQ, he has to provide a TCS certificate to the purchaser of the goods. Form 27D is the certificate issued for TCS returns filed, right? So he has to provide it quarterly, right? He has to do in Form 27 EQ, and a TCS certificate is also given to purchaser of goods. Form 27D is the certificate issued for TCS returns filed. So he has to provide a certificate to the purchaser that yes, TCS was collected and it is being duly filled and filed and paid to the government. And then there is another certificate that is there is another Form 27D in which he has to file the returns. This certificate contains the following details. Now, what details this return contains? Name of the seller and buyer, TAN of the seller, right? He must have TAN number to deduct the TCS, who is filing the TCS return. PAN of both seller and buyer. So TAN is obviously available to seller only, not to the buyer. And a buyer is not supposed to give his TAN number. If suppose he is also deducting TDS for some other things, so his TAN number is not required, only of the seller. PAN of both seller and buyer, total tax collected by the seller, right? Date of collection, rate of tax applied. The certificate has to be issued within 15 days from the date of filing TCS quarterly, right? This certificate has to be issued within 15 days from the date of filing this TCS quarterly. The due dates are, now let's check what are the due dates. Quarter ending date for generating Form 27D. For the quarter ending 30th June, 30th July. This is for filing due dates for filing the TCS. For the quarter ending 30th September, it is 30th October. For the quarter ending 31st December, 30th January. So after the quarter is ended, you get one complete month to file the TCS. For the quarter ending on 31st March, we get 2 extra months. You can see it is 30th May, right? So for every quarter, it is 1 month. But since financial year closes on 31st March and it is difficult to do everything in April, so government has given 2 months, that is 30th May, you can file the return. In case you're still confused, you can still check on Clear Tax websites. TCS exemptions. Now, what are the exemptions that are applicable? Means when TCS is not deducted when tax collected at source can be avoided. When the eligible goods are used for personal consumption, the purchaser buys the goods for manufacturing, processing, or production and not for the purpose of trading those goods, right? So when the purchaser is buying for further trading of goods, then it is deductible, and if it is not for further trading, it is not deductible. Any dealer or trader selling goods online would get the payments from the online platform after deducting an amount tax at 1% under IGST Act, 0.5% in CGST, and 0.5% in SGST. So now we will discuss this GST term completely in coming slides. So it's just saying ki if there is any dealer or trader selling goods online and they are getting payment from the online platform, then they can get the payment after deducting the tax at 1%, right? Under IGST Act. If it is, we are talking about TCS under GST. So how TCS is collected under goods and services tax? The tax would have to be deposited to the government by the 10th of next month. Earlier it was 7 days, now under GST, it is 10 days. All dealers, traders are required to get registered under GST compulsorily. Now, obviously, we know that we are paying taxes under GST basis. So that is why we are discussing TCS under GST. These provisions are effective from 1st October 2018. For example, Mr. Raj, seller, is a trader who sells clothes online on Flipkart. He receives so Flipkart is a buyer, right? He receives an order for rupees 10,000 inclusive of commission. Flipkart would thus be deducting tax for rupees 101% of rupees 10,000. Right? Now, submission of Form 24G. In the case of an office of the government where tax has been paid to the credit of central government without the production of challan associated with the deposit of the tax in a bank, below are the changes to the rules. Form 24G has to be submitted. So how we have to submit this under section Form 24G? There is a challan that has to be filled, and there are certain rules to be followed. Now, here we are talking about submission of Form 24G, which is not related to TCS, which is related to TDS. So I'll just wind up this TCS concept. So what is TCS concept? When it is the tax collected at source and it is applicable on certain products, only these kind of sellers can collect tax as source, right? And these are the buyers who are exempted from tax collected at source. And we say that TCS return has to be made every quarter. Payment of tax collected at source is to be made by maximum 7th day of the next month, and return has to be filed by maximum 1 month. And we are given these dates, right, for every quarter. So now this is submission of Form 24G is basically we are talking about how we actually file the TDS return, how the website look like, how the forms look like on Income Tax Department website. So it is services. Under services, we have gone to ETCS, statutory of Form 24G statements. So we have to fill that accounts office ID, then provisional receipt number, then we have to provide this security check code. If TDS has been deposited without a challan, the person to whom TDS has been reported for depositing to the government, such a person has to submit a statement in Form 24G to the agency authorized by the Principal Director of Income Tax. So it is basically saying that I have not filled the challan, but I have deposited the TDS. I have not filled the challan. So I have to give the statement. Why? I have not filled the challan, and I have to give the statement in Form 24G. I have to give this to the authorized party that has been appointed by Principal Director of Income Tax. Such Form 24G must be issued within 15 days from the end of relevant month, right? So this form must be submitted and issued within 15 days from the end of the relevant month. So suppose I am paying TDS by maximum 6th of April, that is for March end. For March month, I have collected certain TDS and I am paying by 6th of April. So by 15th of April, I must submit this document. For the month of March, the form should be submitted by 30th April, right? Just a second. Right. So it should be issued within 15 days. So for month of March, the form should be submitted by 30th April. Form 24G must be submitted electronically under digital signature, electronically along with the verification in Form 27A, C, or verified through an electronic process as prescribed. Right? So Form 24G must be submitted under digital signature, must be submitted within 15 days after paying TDS, and it must be done through, it must go through electronic verification process. So digital signature electronically and electronically verified. And I hope, I don't know how many of you are actually aware of this electronic verification, but when you file if you are aware कि when you file your ITR also income tax return, there is e-verification required. And earlier what we used to do, that we used to sign the paper and our CA used to submit it to Bangalore. But now since many years, you have another option also that you can e-verify through your net banking, and there are many other options. So that is e-verification, right? For that, you do not have to physically print, sign, and send it to Bangalore. So e-verification and digital signature is also required. The Principal Director General of Income Tax shall specify the procedure for furnishing and verification of statement Form 24G. Right. Also, rules where TCS under Section 206C is deposited without challan changes to Rule 37CA. So now, till now we were discussing about TDS, that if you suppose do not file TDS within the challan, as per the challan, you have to file the statement in Form 27. Similarly, in TCS also, if you do not file in Challan 281, you have to fill the Form 24G and submit the statement to the authorized person. So rules are same. If TCS is also deposited without Challan, you have to submit the statement to the main Principal Director of Income Tax. So this is basically for your general knowledge. You do not have to mug it up. This is for your general things that you have to fill the TCS or TDS in challans, and if you fail to do so, you will have to file the statement under particular form to the authorized party which has been appointed by Principal Director of Income Tax. Such Form 24G must be submitted within 15 days from the end of relevant month. So now same thing for the month of March, it must be submitted on 30th April. So Form 24G must be issued, and again same conditions. Digital signature is required. E-verification in Form 27A is required. Verified, or now this has an option. Either it should be electronically along with verification in Form 27A, or it should be verified through electronic process as prescribed. A person referred to in bullet 1 shall inform the book identification. This is bullet 1. This person appointed by Principal Director. Person referred to in bullet 1 shall inform the book identification number. Just a second, my mistake. Inform the book identification number generated to each of the deductors for whom the sum deducted has been deposited. So this person who has been appointed by the Principal Director of Income Tax, to whom we are submitting our statement. And when we are submitting the statement, when we are forgetting to file the TDS or TCS in challan, so that person is also responsible to inform, that authorized person is also responsible to inform the book ID number generated to each of the deductor for whom the sum deducted has been deposited. Right? So book ID number has to be provided back to these deductors. The Principal Director General of Income Tax shall specify the procedure for furnishing and verification of statement. Right? So this director only specifies how you have to verify your statements, how you have to provide it to the necessary person authorized by them, right? So that was all about TDS and TCS. We know what is TDS, tax deducted at source, basically collected by employees or any other person who is paying certain income, and tax collected at source is on goods and goods, right? It's not on services, it's on goods. Goods and services tax. Now, this is the goods GST, which we will talk about, and this is the tax under which we are all being operated in the economic society. Now, was a revolutionary step, goods and services tax, just to see how the economy. There were many confusions before goods and services tax, because we had value added tax, we had entertainment tax, we had gift tax, we had wealth tax, then we have what we say this Delhi DVAT was again separately introduced, Delhi value added tax, and there were multiple steps on which taxation was done. So, just to avoid this multiple steps of taxation, goods and services tax was introduced. Now, let us see. GST is a simple, sophisticated, and consumer friendly way how the government of India will collect the tax from the businesses and individual citizens. GST is implemented in India to replace the previous indirect tax systems, which were very complex, with a simpler uniform tax system. Just to stay simple, just to stay uniform, right? Just to avoid double taxations, goods and services tax was introduced. Now, it means it's a consumption based tax, which means the tax should be received by the state in which the goods or services are consumed and not by the state in which the goods are manufactured. So, earlier, what was happening? The goods who were manufacturing, they were collecting the tax, right? And they were having the tax thing, but goods were being consumed in a separate state. So, just to be specific, the buyer, in which state he is consuming the goods, in that state the tax will be paid to the state government. Suppose I'm buying from Mumbai but consuming in Delhi, so I will be paying tax to Delhi government, that is state government, not to Mumbai government. This is how GST works. A simple way to explain. Let us see further. Now, the GST tax system will take the form of dual GST, which is concurrently levied by central and state government. So either it is CGST and IGST, or it is SGST, right? Or UTGST. CGST is central government, central goods and services tax, and SGST is state goods and services tax. Now, GST is composed of three types of taxes, and those are CGST, SGST, UTGST is Union Territory Goods and Services Tax, and GST, and which are determined by the government of which are determined by the movement of the goods or services, that is intrastate movement or interstate movement. So IGST is basically governing the interstate and intrastate movement of goods. What is interstate movement of goods? Interstate movement of goods is between one state to another, and intrastate is basically from within the state, right? So when I talk about IGST, it is basically the integrated goods and services tax, and it is basically governing the movement which is intrastate or interstate. Many economists and experts have predicted that a GST bill will boost up the economy in long run. So this was basically introduced to boost up the economy, right? And to avoid double taxation and to keep it simple. Now let's see how GST boosts up the economy. This makes the growth of the let's read it. Many economists and experts have predicted that the GST bill will boost up the economy in long run, but we see some short-term impact on the economy too. India is a collective economy where each state has its own set of rules for them. This makes the growth of the country slow, causes difficulties for the business, and higher possibilities of tax evasion and corruption. In addition, previous tax system was complex, so small businesses used to ignore. So what is happening, that we know that main franchises, big businesses, they collect tax, they file GST, they claim GST, right? But small people who are selling maybe much more than those big businesses, but they're not able to collect tax, they are not able to file the returns and whatever properly. So there are a lot of tax evasions on that. So just to avoid that, we introduced GST to make the tax payment simpler and create a win-win environment for both government and as well as business. GST was introduced. Now let us learn. Our main motive is how to operate TDS and TCS in Tally, right? Otherwise, all is the background, rest is all the background knowledge, but our main purpose is how to operate and run GST in Tally. So where we have to go, gateway of Tally, F11 features, statutory and taxation. Let me just zoom it for all of you. And if you all remember, हमने यहाँ पे enable TDS, set alter TDS details, we put it to yes and we activated TDS. And similarly, we will enable, we didn't discuss yet how to activate TCS. So I'm just clarifying here only. Enable TCS here only. Tax collected at source, set alter TCS details. Now, Tally also provides for this GST. Enable goods and services tax? Yes. Set alter GST details? Yes. See if you can observe, it has also the provisions for value added tax, excise, service tax, but obviously we are just focusing on GST. So F11 statutory and taxation, F3, and on the screen you can enable and put it to yes. Now you can set GST details of the company, such as the state in which the company is registered. We have to provide the state because every state has different rate, and you can set GST details and you can provide the state in which it is registered. Then you can provide registration type. You can provide GSTIN number, goods and services tax number, identification number. Right now, this is the place where you provide these details. State, registration type, assessee of other territory means if you're belonging to some other union territory or what, the assessee. Right? GST applicable from GSTIN number, unique, this UIN is unique identification number or goods and services tax identification number. Periodicity of GSTR1 monthly, e-way bill applicable, yes, applicable from, I'm just zooming in, 1st April 2019. Threshold limit includes invoice value, threshold limit 50,000. So this is a rough assumption that we are providing. Applicable for interest rate, yes. Threshold limit 50,000. Enable tax liability on advance receipts, no. Enable tax liability on reverse change, no. Set alter GST rate details, no. Enable GST classifications, no. Provide LUT or bond details, no. So you can, this is by default, no. I'll just explain you why, what is threshold limit, what is LUT or bond details, right? Meanwhile, I was just reading that how after enabling this GST to yes and accepting the screen yes, what details I need to fill further. So F11, F3, this statutory, if you can see, this is highlighted. That is why it's looking gray. And under F3, I have put it to this as yes. And after that, I have provided all these details. Now, if the state is changed here, then your transactions, invoice printing, reports, and returns will be impacted, right? So they're warning that if you change your state, everything, your tax rates, reports, everything will be impacted. So means whatever you have conducted, suppose you have already filed, you have already filled in Tally all the details, transactions, journal entries as per. If you're operating in Delhi, you have filled as Delhi initially when you were filing the details, address details of the company. Right now, you are enabling GST, and in state you have changed from Delhi to Maharashtra. So then, in that case, certain warning sign will come. So make sure your state is same, or it depends upon which state you want to choose. Set the registration type as regular. Set the option Now, these are the details we are discussing this. These are the details discussed here in points. Set the option SSA of the other territory to yes. So it's talking about this state, Maharashtra, registration type regular. Now, if your business unit is located in the exclusive economic zone or another territory, then set it to yes. Now, specify GST applicable from date. GST will be applicable from this date onwards. So you have to provide a date from which GST is applicable. If you want to activate from next financial year, you have to provide it the next financial year date. So we are basically providing, obviously, no one will enable GST from the middle of the year. I don't think so. It will be a very rough and general case unless and until you have started your company in the mid of the financial year, right? So GST applicable from, we are assuming the first date of the financial year. Specify the GSTIN, goods and services tax identification number, unique identification number for the business. This can be printed in the invoices as required. So you have to obtain this before starting with GST business, right? And we will obviously discuss that how this state GST works, that how different state has different GST rates. Select the periodicity of GSTR1 as monthly or quarterly based on your business turnover. So depends. If you have high turnovers, take it as quarterly. If you have low turnovers, take it as quarterly preferably, and if you have high, try to be monthly. The option e-way bill is applicable is set to yes with the applicable date and threshold limit, right? Select the value to be considered for e-way bill for the option threshold limit. Now we have selected 50,000. Set the option applicable for intrastate to yes if it applies to your state and enter threshold limit. So if you are selling within your state only, that is intrastate, then select it applicable for intrastate, yes, right? This one. And the threshold limit. Additional field may appear for few states depending on the statutory needs of the states. Now, it says that we are talking about Maharashtra, so we do not have additional fields. But suppose if it is Kerala, or if it is Ladakh, or if it is Jammu and Kashmir, if I have filled these as my states, or if it is Dadra, and we'll just discuss all of this, then you have additional details popped up to be filled in. And let us see what are they. Now, before moving to next slide, let us see what is LUT. No, not okay. LUT is discussed later, right? So we will discuss later, right? If suppose I am filling Kerala as my state, then what additional fields are required? If I suppose fill Kerala here, there are few other fields that are required here. The field Kerala flood cess applicable is also there, and applicable from appearing for companies with Kerala as state and regular as registration type in release 6.5.3 and later versions. So it is saying that if I select Kerala as state and I am selecting this as regular, registration type as regular, state as Kerala, then Kerala flood cess is applicable, right? And it has been applicable only in Tally version 6.5.3 onwards. Before these versions of Tally, before this Tally 6.5.3, you will not be able to find this Kerala flood cess rate. Okay. So in the latest versions above 6.5.3 or on 6.5.3 of Tally, as and when you fill Kerala as the state for GST details and you file it as regular, then you have this Kerala flood cess applicable. That's a separate rate for Kerala state. Ladakh. As Ladakh has been separated from Jammu and Kashmir and awarded the status of Union Territory, you can specify the new GST registration number assigned for Ladakh in GSTIN or UIN field. So in this GSTIN or UIN field, you can provide a separate registration number if you are filling Union Territory as Ladakh, right? And this has been And the existing registration number in GSTIN UIN prior to 1st January 2020. So if we have done this, if we are operating the statements, if we would have been operating the statements before 1st January 2020, and I have filled Union Territory as Ladakh, then I will fill only the existing registration number. But if I'm doing after 2020, maybe suppose in this year, and I have filled Ladakh as my union territory, I have to fill a new GST registration number because Ladakh has been now declared as union territory and it is separated from Jammu and Kashmir. In case GST dealers in Jammu and Kashmir, now suppose the GST dealers are in Jammu and Kashmir and we are preparing accounts for those in Tally, they're required to get a new GST registration. You can specify the new GSTIN in the GSTIN UN field, and the existing can be specified prior to 1st January 2020. So same is applicable for Jammu and Kashmir. If we are working on the reports and statements before 2020, Jammu and Kashmir car registration number that is existing, we will provide that for the companies. And if I am filing the statements for new companies, preparing the financial statements for new companies after 2020 of Jammu and Kashmir dealers, then I have to get the new GST registration number, right? The majority of the businesses will not require new registration. They can continue with their existing ones. And you can see the GSTIN number in option F12. Now, Dadra and Nagar Haveli and Daman and Diu. 2019 and 20, they were declared as separate union territories in this year, in this financial year. The name of the new union territory, Dadra and Nagar Haveli and Daman and Diu, is provided in release 6.6.3. So there, this GST rate is and their separate union territories lists are provided in Tally release 6.6.3. So for Ladakh, it was 6.5.3. But for this Dadra and Nagar Haveli and Daman and Diu, it is from Tally release 6.6.3 onwards. All masters with Daman and Diu and Dadra and Nagar Haveli are automatically updated with the name of the new union territory. You have to manually specify their new number, that is GST ID or unique ID, in case you want to view state or union territory and GST ID or unique ID of the company before the merger. Right? You can also enable the show state and GST ID before reorganization for Dadra and Nagar Haveli and Daman and Diu under F12 configure. So they have been declared as separate union territories, and from Tally release 6.6.3, this option for separately registering their union territories for GST is available, not before this Tally release, and you have to manually specify their GST ID number, right? And before merger, you can also see this option, state and GST ID number before reorganization for Dadra and Daman and Diu. The field state before reorganization and GST ID number before reorganization are displayed with the details specified before reorganization. The GST ID before reorganization does not appear if the pre-merger union territory was Dadra and Nagar Haveli. So if I am talking about the pre-merger union territory, that is Dadra and Nagar Haveli, GST ID number is not there, but for Daman and Diu, it is there. Now set the option enable tax liability on advance receipts to yes. Now we are discussing this point. Enable tax liability on advance receipts, yes. Set the option enable tax liability on reverse charge. Now what is reverse charge? And we'll discuss. Purchase from unregistered dealers. Who are unregistered dealers, right? URD, like farmers, they are unregistered dealers. Reverse charge. What is reverse charge? Charge paid by recipient of supply of goods instead of supplier. So those who are receiving the supply of goods, they are paying the charge and not the supplier is paying the charge. Now there is an example also. For example, XYZ Private Limited, a registered company, that is a registered dealer, purchases raw cashews worth rupees 50,000 from an unregistered farmer. Farmer does not charge GST, so XYZ will pay. Farmer is an unregistered dealer. He is selling cashews and XYZ is receiving them. So supplier of cashews is not paying GST, though it was required by farmer to pay GST, but the receiver, that is the buyer, is paying GST. So what is the case? Set the option enable tax liability on reverse charge. That is the reverse charge. Reverse charge means the buyer is paying GST, not the seller, because seller is an unregistered dealer like farmer. To yes, and to activate calculation of tax liability on reverse charge on URD purchases, this option is disabled by default. So you can set it to yes, that if you're buying from farmers and he's unregistered and you have to show GST, you can pay on his behalf and collect from him. Enable the option set alter GST rate details. Yes. Set the option enable GST classification to yes. Set the option provide LUT or bond details to yes. Now, what is LUT? LUT is letter of undertaking. What is letter of undertaking? It's a document that exporters file to export goods or services without paying taxes. So, when I say, first of all, it says provide LUT or bond details. You can enable it to yes if you are exporting goods, number one, and when you are exporting goods, you are not paying tax, number two, and number three, you are providing letter of undertaking for that. In that case, you are providing LUT details or bond details. So LUT is that you are taking exemption from GST while exporting the goods and you are filing this letter of undertaking. Then you have LUT details and you have to fill the number, right? So, yes. So now they have again shown for Karnataka this same GST details: state, Karnataka, registration type regular. Then you have unique GST number, GST applicable from, assessee of other territory, no, periodicity of GST R1, monthly, e-way bill applicable, yes, applicable from, right? E-way bill applicable from is from 1st Feb 2018 and GST is applicable from 1st July 2017. So these states can also be different. Threshold limit, invoice value, threshold limit is 50,000 for intrastate. Yes. For threshold limit means beyond, if I'm selling beyond 50,000, then only GST is applicable. Enable tax liability on advance receipts. No. Enable tax liability on reverse charge. No. And other details are also set. GST classifications, GST rate, LUT bond details too. No. Now, as this is like another example given in GST, that suppose you have filled for Karnataka, then what details you can fill? Means it's a rough example for a company, right? Now, I accept the screen and press it to yes and save it. Activate GST for composition dealers. Open the company for which you need to activate GST. Press F11, F3, right? And we'll discuss this just a second. Let's just finish what we are reading. Now, suppose I'm on F11. I have activated this again F3 button and I have enabled this and I have filled this Karnataka registration type. Now, they have said if registration type is a composition, and I'm not taking Kerala now, I'm taking Karnataka as state. And earlier we had talked about this regular. Earlier it was regular filled. Suppose we are saying registration type is not regular, we are talking about the composition dealers. Assessee of other territory, no. GST applicable from, GSTIN number, tax rate for taxable turnover 1%, basis for tax calculation, taxable, exempt and nil rated values or taxable value, whatever I can provide, and threshold limit. So in that case, this is how it appears. That tax rate is applicable from this. What rate is applicable? 1%. Basis of tax calculation on only taxable value, right? till 2 years it is like taxable value, and from 1st April 2019 I've changed to taxable, exempt and nil rated values, right? So actually it's hidden how when it is applicable from. So this is basically they are roughly showing all together everything that you can just change these tax rates and taxable values or taxable, exempt and nil rated values, right? Now, and the option is applicable when we are talking about the composition dealers. If you can see, as soon as I have selected registration type as composite, I have this tax rate option here and basis for tax calculation. Earlier, if you just see, it was not there, right? So now business with annual turnover over rupees 40 lakh and 20 lakh in special category, they are required to register for GST, and this is what we call it as threshold limit. Although तो हमने 50,000 roughly provide कर दिया, this is we are talking about threshold limit, right? So if GST value, when we have to take this GST number when our business is being selling at we are having a turnover of more than 40 lakhs and 20 lakhs for specific categories. Interstate supply of goods exempt from GST if turnover is less than rupees 20 lakhs across India and rupees 10 lakh for specific categories. So IGST is exempted if your turnover is less than means interstate. If you are doing across the India, your IGST is exempted if your turnover is less than 20 lakhs and 10 lakhs for specific categories. Intrastate is CGST and SGST both. Now, either CGST is applicable or SGST is applicable, IGST is applicable. So, if there is CGST and SGST, that is either this is applicable or IGST is applicable. Integrated Goods and Services Tax or CGST and SGST. Here tax is going half to the state government, half to the central government, and here tax is going to the main authority. So if IGST is 18%, then CGST and SGST is 9% plus 9%. So roughly, it's not, there is no loophole that we should make sales in such a way that we are attracted for this IGST, interstate goods and integrated goods and services tax, right? Roughly, we will be paying same only. If we are, this is basically for intra-state, right? Within the state, CGST and SGST. If we are doing within the state, we are paying these two types of taxes, which is roughly approx 18%. If we are doing across India, right, then also it is approx 18%. So we are being charged approx same values only. Now, what are the merits and demerits of GST? Merits is like one nation, one tax, right? So if it is all over India, we are having IGST. If it is within the state, we are having CGST and SGST. Then we are trying to pay proper tax, and we are obviously paying lesser taxes because we are avoiding double taxation, and it is good for other business moves also. Now, ठीक है, one nation, one tax agreed. We are paying lower taxes and having more scope of business environment and flexibility. We are removing the cascading effect of tax. Now, what is the cascading effect of tax? In simple words, cascading tax effect means a tax on tax. In previous tax system, the tax was levied on goods at each stage of production process and to the point of being sold to the final consumer. So that is basically double taxation. I'm selling to the retailer, tax is being done. Then retailer is selling to the final retailer, then tax is being done. And the final retailer is selling to the final consumers, tax is being conducted. It is being deducted. So there are tax on the same product is being taxed at 3 times. So this is cascading effect of taxation. And if I say the fourth merit, it is easy to create challan and pay it online on GST portal, and pay tax file can be signed digitally. Now, what are the drawbacks? A common man is unaware of how the GST works. Moreover, citizens are used to previous direct taxes, so it would take time to digest the whole big change and also to get familiar with the GST. Now, obviously, this GST requires business softwares, ERP softwares, and we know that at high level we can upgrade with these softwares, but जो basic grocery stores and those who are having good businesses, they find it difficult to get updated with these business software. So that's a drawback, right? So common man is unaware, business softwares they have to install and they involve costs. And we can see that this tax needs to be filed each month and compliances are more strict, more stringent. This might create a problem for small businesses, right? So the rules are more strict. CA services and GST compliant complaint account software and related tools will add cost to the small business. Filing tax also faces some technical problems. Obviously, you know that when you are working on GST, you all are here also to learn this GST concept and tally on GST, GST on tally. So when we have to pay this additional cost, the training costs, the softwares, right? We need to train our professionals, the accountants, that what is GST, how it will work. It is more of like a burden. But yes, of course, this burden is for good because one nation, one tax, and we are avoiding the cascading effect. So we have few merits and few demerits, and also difficult for small manufacturers basically. So likewise, a lot of business has spiked their prices after giving GST excuse. So yes, after GST has been introduced, they say GST rate is very high. So after GST, the prices very much high. If you can see, even if you're having a Wi-Fi connection, they say 900 is the package, but the final package is of like 1100 rupees. 200 rupees is just the GST. So yes, GST has costed not only the companies who are selling the products, like they are training their professionals, they are installing new softwares, they have to make changes. Plus, even the consumers are paying more. Sellers and buyers both are affected, right? So this was all about GST, TDS, TCS, and we will continue with payroll and BRS in next class. And we'll try to start with the busy software also. Any doubts for today? You all are welcome to put it right now in chat box. Okay, I can see there are no doubts for today. So we'll meet in next session. Thank you everyone. Have a nice day.